Okay, we're going to give it a go here and show you how to do a couple of payroll calculations so that you can see what's involved in this. So we're going to look at Payroll Deductions Calculator for Canada. Just go into there on Google or whatever you like. So this online calculator is provided by Canada Revenue Agency, or CRA, and it's pretty handy actually. It works good, especially if you're just doing a couple of small calculations. So right in here, I'm just going to get started and accept the conditions for the calculator. And I'm going to use a salary here where I'm going to pay someone $5,000 in a month and just see how this calculates it. So we're going to choose salary and go next. I'm going to put the employee's name. Okay, well, we'll put John, actually, we'll put Mark Bevington. Let's do that. And the employer's name can be ABC Contracting Limited. And we'll say that this person is working in Alberta and we are paying them monthly. You can see, look at all the options you got here. You can pay someone daily, weekly, bi-weekly, semi-monthly, monthly, lots of different options in there for sure. But in this case, we'll just keep it simple at monthly. And the employee is paid, well, let's pay the employee right at the end of January of 2021. So January 31st. Okay, right on. So we have a salary of $5,000 and we're going to ignore vacation pay just for the time being. We don't have any bonus or retroactive payment or anything like that. We're not going to add in any taxable or other taxable bonus benefits or deduct any union dues or other stuff like that. We're going to just keep it simple for the time being. And we're not worried about the clergyman residence or anything like that. So just press next here to move along. Now, this part here where it talks about a TD1 federal or provincial form, that's just a form that you fill out when you start working for someone and you determine, what sort of deductions you might have, that sort of thing. I'm going to leave it at the very simple claim code 1, which is what the bulk of people will have, so we'll do that. And we don't have any money that we've already taken off of somebody's paycheck yet. There's no previous month's salary or whatever in 2021, so we'll just leave these as 0. Same thing on the employment insurance side, we'll just leave these as 0 and we'll calculate this. So someone who's receiving $5,000, and you could print this out if you wanted to, you can see how you earn $5,000 and you'll have deductions for taxes, federal and provincial, for a grand total of $867.93. That's going to come off the $5,000 check. CPP deductions at $256.60 and EI deductions is $79. So we're going to plunk those things into a spreadsheet here. Let me just bring up the spreadsheet and bring it over here. And I'll put the spreadsheet up on in our class. But here we are, we had Mark, who had a salary of $5,000. And so he had gross pay wages, not 50. I need 5. I'd take 50, but anyway. CPP and EI, let's have a peek at those again. How much were those? So here we are. Looks like $256.60 in CPP and $79 in EI. So I'm going to just plunk those onto this form. $256 and $79. And there was a bit of tax, so I just need that number, and then I'm going to go through this form in more detail with you. So looks like the tax was a total of $867.93. So back here, $867.93. So what this form does is it calculates payroll for whatever the pay period is here. So in this case, Mark got a salary of $5,000. We needed to deduct CPP, EI, and tax of these amounts, and that should give him about $3,800 at the end of the day. So if you look at that, is that reasonable? Okay, looks like we've got between these two $1,000, yeah, a bit more than 1,000. So yeah, it's in the ballpark. So this is just a little way of calculating, what you get for net pay for somebody. And I'll use my friend John here, and we'll pay him let's just say we're paying him $160, or we're paying him for 160 hours in January, and we're paying him $25 an hour. Well, that means he'll make $4,000 in the month. And so let's figure out the deductions for him. So I'm going to go back into our payroll calculator. So we've already taken care of all of this. Let's see what we can do. Go back to previous. We can stay in. We don't have to redo this entire thing if we don't want to. Can we go back here and we're going to, we'll change the name on this one too. So we'll make this John Williams. Okay. It's for the same month, but he just gets paid on an hourly basis. And we know his total pay is $4,000. Again, we're skipping all of this other stuff just to keep it simple. Oh, I forgot to put 4,000.00. Oh, 10. There we go. That should work. We'll leave the claim code as 1, meaning taking it's pretty much the maximum taxes off. And we calculate, and we can see we're going to take off some tax here. Federal tax deduction $371.89, provincial tax $212.06, for a grand total of $583.95, CPP of $202.10, and EI of $63.20. So $202.10 and $63.20, and so we'll go back into here. $202.10 and $63.20. And if we go over here to how much was the tax? $583.95. So $583.95. Okay, so it does exactly the same thing. This particular schedule says, well, if you start with $4,000 in a gross wage and you take off, well, it looks like it's going to be $600, $200 is $800. It's a little short. It's about $850. Yeah, you should end up with $3,150. That makes sense. So these are what the net pays are. And you can see it gives us the employee totals here. So gross wages, $9,000, 5 plus 4. CPP in total taken off of the employees is $458. EI taken off of the employees is $142.20. And tax taken off of the employees' paychecks, $1,451.88. So even though everybody starts with this higher gross wage, they're going to get a lower gross wage. In this case, they're going to gross $9,000, but get closer to $7,000 in total. I talked about before how there's the employee portion of CPP and EI. And then I said that for CPP purposes, the employer also kicks in a matching amount, the $458.70. So the total amount that needs to be remitted in CPP is actually $917.40, which is just the employee and the employer portions set up together. Now, EI, the amount that we've taken off of employees is $142. And remember we talked about EIs that you would pay 1.4 times. So up in the formula here, you can see it's 1.4 times whatever has been taken off the employees. So that's $199.08. So in total CPP that we take off of there, it's the $341.28. Now with tax, there's no matching amount from the employer. Whatever you deduct from the employee is what you need to, the employer needs to send in, sort of thing. Just what the employee is put into the pot. Add these all up, you can see that number is about $2,700. So we need to send $2,700 to Revenue Canada on behalf of these employees. Now the journal entry that comes out of this is interesting. We end up with a debit. Let me just put that in there, that's a debit, and this is a credit. I have a debit of $9,000 to wages, being the gross amount of wages that we had. And then this is where the expense side comes in. So the CPP and EI expense are the employer's portion of CPP and EI. And we calculated those amounts right here, where it was the matching amount or the 1.4 times. So those are both expenses in this case. Now we know we're going to pay the employees out $69.47.22 in net pay, and that's that number right there, the total net pay for the two employees. Then we also know we need to pay some CPP, It's that $917.40. In EI, we need to pay the $341.28, which combination again of the EI from employees and employers. And then in tax, we need to send in $1451.88. Now, just to make sure that it's the right number, remember debits always needs to equal credits. So the total debits in this case are $96.57.78, and the credits, same, $96.57.78. So this is the journal entry to record the wages for a payroll run or for a payroll for the month of January 2021 for ABC Contracting. Hope you enjoyed that.